And what an interesting conversation that should be just after we've heard CEOs speak to their own investors about the change on a dime, basically, in consumer confidence, in terms of corporate confidence, et cetera, Guy.
You see how quickly consumer confidence can turn. And the last reading we got was really miserable. And we have one this Friday, which is important. CPI tomorrow, which I think is going to be vitally important. But, you know, people are sitting around probably saying, is it over yet? And as much as I'd like to say it is over, the selling, I don't think it is. You saw the VIX at 27, and I'll give you an example of what you were looking for. Today at 1:30, the market went from about 55.29, 55.30 in the S&P and rallied 100 handles. You would have wanted to see continuation. And by the way, we've seen things like that before. You obviously didn't see it today. In the last hour of the day, we sold off again like we did in the middle of last week. So we're still in the midst of, I think, a market that wants to sell rallies more than it wants to buy dips.
Right. Yeah, and the headlines, you know, this week, I guess for the last couple of weeks, when you think about CPI, PPI, and consumer confidence, yeah, they're all backward looking. But when you think about what's going on here, it's not going to help those going forward. Even if we keep going back and forth, 25 or 50, if we keep leaning into our biggest trading partners and our biggest allies, that sort of thing. So, again, you have the potential for weakening just in the back and forth and the volleys here. And the other thing I'll just say is, like, look at American Express and then look at Capital One. And you think about these two different consumers that are customers of these two companies. They are pricing in a recession right now. Look at what led to the downside in the banks.
In terms of their stock moves.
Yes. Yeah. You know, American Express was trading 327. This was just a month ago. And right now it closed at 255. I mean, it literally is for sale. Capital One's the same thing. JP Morgan leading to the downside today. It was acting much worse relative to the other money center banks. So, you know, I'm really focused on that group. And I'm not telling you just because those stocks are selling off, it means we're going into a recession, but investors are pricing them for a recession right now.
It was Stuart Kaiser we had on just yesterday from Citi saying, you know, the bank trade is really an institutional trade. So you can see the money coming out of the Mag 7, for instance. Money will go back to the Mag 7 just because of who wants to hold it. Everybody wants to hold it. But the bank trade is really an institutional trade. So when you see the likes of a JP Morgan go down and feel the pressure and continue to feel the pressure, that's probably institutions voting with their feet at this point.
I definitely agree. I will say equity exposure amongst institutions still has not rolled over. And I think that will go hand in hand. And not only us being probably 10 handles higher on the high print of the VIX today, but us probably coming back down to that 35, 37 type of level. We still haven't really seen those intraday spikes that really, to me, would suggest like utter and relentless capitulation. You know, I think, you know, a lot of the stuff, you know, we focus a lot on the Mag 7 and the growth area because clearly there's higher beta and we have seen those exacerbated moves. But to Dan's point, you look at the banks, you look at Kohl's, you look across the spectrum. We're starting to see these type of moves in names that suggest that they are lower beta, that they are more value or economically oriented. And so while I do think recession fears are a bit overblown, I do think it's a bit of a misconception to assume that being out of growth, a rotation out of growth necessarily saves you from the volatility that we're seeing in the market.